Thank you, Mr. Chairman. Mr. Su, in statements to the press, you suggested that the OCC's regulatory review would include the 3 conditional approvals the agency issued to national trust banks that provide digital asset custody services, approvals that, according to the OCC itself, can only be revoked if there's a material change to the information on which the agency relied. These approvals, which were granted only after extensive engagement analysis, would presumably improve safety and soundness and reduce risk by bringing digital asset activity into the regulated banking system. In recognition of these benefits, just last week, the U.S. Marshals selected one of these institutions, Anchorage Digital, as its provider of digital asset custody for seized digital assets. Shouldn't we be encouraging more innovative financial institutions, including those that provide digital asset custody services, to enter into the regulating banking system if they choose? And wouldn't that tend to result in increased oversight?
So I'm very supportive of responsible innovation. The purpose of the review is to make sure that we're taking a holistic approach to both chartering and to the regulatory perimeter to ensure that there's not regulatory arbitrage across different agencies and that there's not a race to the bottom and a shadow banking system. So we're trying to weigh all of these things. They're currently on an interagency basis. We have this digital asset sprint initiative. Which
I've got very limited time. I want to stress this, though. It seems to me companies operating in this space, in many cases, they want to play by rules. They want to be regulated. They want to comply. I think it does a lot of damage to the credibility of the OCC. It damages economically. When an institution receives an approval, stands up an operational business, complies with the conditions under which the approval was granted, and then it's subject to being pulled out from under them. Are you saying that the career staff at the OCC got it wrong and didn't take these things into consideration when they issued this approval?
No, we're reviewing this cognizant of the standards and the practices of the past. We're doing this in order to be holistic and to ensure that we're making this decision in coordination with other agencies.
Well, I would just urge you to keep it very much in front of mind that they went through a full-blown due process, bona fide process, and people ought to be able to plan on when they get approval, they can actually engage in the business that was approved. I would also want to just say briefly, the CRA review, I think it was a big mistake to be reconsidering the CRA. It had been 25 years, and the updates were mostly about providing clarity, objectivity, and transparency. Can you commit to retaining those principles, clarity, objectivity, and transparency in whatever direction this new rule goes?
Yes, in addition to strengthening and modernizing, as part of strengthening and modernizing the CRA, yes, I can commit to that.
Very quickly, you've made several references to climate risks and eventually banks having to have new capital rules, which presumably means increased capital requirement to deal with climate risk. As you know, capital requirements are designed to absorb losses that can occur in the short run, but climate scenario analysis is really about 50 and 100-year scenarios. Do you know of a single expert who can tell any of us how climate change is going to affect banks in, say, Lancaster County, Pennsylvania next year?
Our focus right now is on risk management, the safety and soundness related to risk management. And so really it is about recognizing that climate change presents risk management challenges and that banks need to prepare for both the physical and the transition risk related to climate change.
Okay, well, let me put it this way. Are you aware of any banks that have failed in the United States due to Superstorm Sandy, Hurricane Andrew, California wildfires? Can you name a bank that failed as a result of not having planned for extreme weather events?
I cannot think of any at this point.
Neither can I, and we've had a lot of extreme weather events over recent decades, so I would suggest that banks are probably aware of risks that they run. Chairman McWilliams, I was glad to see the FDIC's recent request for information on digital assets. I think there's a tremendous potential benefits to consumers, to our economy, that comes from this distributed ledger technology, which could have all kinds of really constructive applications. Could you just share for us, what have you learned from banks and other financial institutions about some of the ways in which they're using this technology?
Thank you, Senator Toomey, for that question. As you may know, the comment period closed on July 16th. We're reviewing comments. And there's a lot of encouraging information, frankly, on how technology can benefit our banking system. One of the main responses we have gotten so far is about the benefits of the interbank payment network and the benefits that that can provide to entities that are within the network. I also think, if I may just add a personal note to this, the 20th century was America's century. The 21st century will not be America's century if we're not open to innovation and allowing our companies to compete with international competitors.
Thanks, Mr. Chairman.